Hey everybody, good afternoon, good evening, good morning, wherever you are. This is a 12-minute trading on Monday, the 27th of 2023. All right, so 27th of November, I guess. Okay, so my name is Doc Severson. I'm going to be running solo here today. Dave, unfortunately, is not going to be with us. So it is going to be you and I live for those of you that are live. Or probably most of you are going to be watching this on a replay. So hopefully we'll go over the markets in the next few minutes here, probably 15, 20 minutes, depending on if there's any questions or not. And I'll let you know what I'm seeing in the markets, the potential for them to keep trending, and any other particular plays that we have. All right, let's get into it here. Welcome aboard, everybody. All right, so I'm going to put myself down in the purgatory in the lower left-hand corner. I'm going to start off today by looking at the S&P, and after this monster 450-point move, what I'd like to show you here is, and I got to get my pen going here. Give me a second. We'll get my pen going. I need to talk with my hands, which is including the pen. All right, so here we go. What we're seeing is over the past few days, we're seeing the market moving into what we call stair-stepping mode. So we're getting a breakout, consolidation, breakout, consolidation, breakout, consolidation. So it's moving into stair-stepping mode, which is part of the character moving away from what we call trending and volatile, or even sideways and volatile, which is what we had this summer in August, September, and part of October as well, too. So about 3 months of sideways and volatile. We're getting back into quiet and trending behavior. And this is much more linear price movement. It comes at the cost of implied volatility. So we don't have much implied volatility. The risk premium is relatively low right now, but that is displaced by the linearity of the price. So there's good and bad in both, right? So during markets like this, you can go crazy selling premium, but you're going to get run over from time to time where the price outruns the implied volatility. And now this is where it becomes a lot more dangerous to sell premium unless you can spot these opportunities where it just goes sideways. Now, there's a couple of different ways that we'll do that as I'll go into today. So what I'm looking at in the S&P right now, let me clean this up. I got quite a mess here. If we go down from the monthly chart to the daily chart, so monthly, weekly, and then daily, we're going to get a different view depending on what we look at. Right now, the trend is still to the upside on the monthly chart. Now, what I'd like to see is after that pullback from August, September, October, I'd like to see the price get above 4,600 to maintain this polarity of the uptrend. You can also see the same thing is happening here on the weekly chart where we had a downtrend for 3 months. Now we're starting out with the initial impulse move to the upside, which is 1/2 of the transition to an uptrend. What we need from the weekly chart is some type of consolidation, some type of a higher low followed by a higher high. And it would be nice if that was above 4,600, but it's not necessary. The price could pull back, create the higher low. As long as we end up with a higher high in the other end of that, everything will take care of itself. And the daily chart is in this little range-bound thing here, and what we're seeing is the energy is waking up again because we're dropping the gap off of the back. And as of tomorrow, we're going to be dropping this big green candle off of here. And so we're going to see the energy scoot up pretty soon. Now, the problem here is, so the daily chart's going to be ready to go here pretty soon. Within a day or so, it's going to want to move. And the problem that we're going to be running into here is the weekly chart is just about out of gas. Whoa, bad timing. So a lot of times when things like this happen, you have to ask yourself, what would have to happen to both of these charts to satisfy both of these? Well, the weekly chart needs to break. After 4 straight weeks of upside, 450 points, it needs a break. And we might start, we might start to see this drop back just a little bit here, maybe even fill some of these gaps that are out there. The gaps are way down there. So that's quite a move to go fill this gap all the way down here. So keep that in mind. So again, when we see markets have a kind of a dichotomy here, if the weekly chart wants one thing, the daily chart wants something else, usually the weekly chart will win in that situation. All right. So that is our S&P chart. And the other chart, which I think is interesting, here's the Russell. Here's the Russell. The Russell is underneath the 200-day moving average, and it's consolidating. Now, we recently had, this is a completely bearish chart. It's totally bearish. This is a bear flag breaking down from a bear flag, but right now what it's creating is a bear trap. And that will be completed if the price is able to rise above the 200. I think there will be a lot of short covering if we see the price rise above the 200, and I think a lot of institutional money will go into that. So I'm going to be potentially looking at an asymmetric reward to risk play in the next few days of setting up maybe a call spread up here, maybe in the 1900s. And if we do something like that, this is what it's going to create if we look at the Russell. So if we set up a trade for cheap here today or tomorrow, whenever it is, set it up for something inexpensive and then set up the target way out here. You can see the risk on this trade is very little, maybe $100 or something like that, where we could literally make 900 from something like that if we get our targeted move up to maybe 900, 1900 or higher from that. So that may be something to consider for you guys this week. Again, I don't expect a trade like this to win, but I've got to be putting on asymmetric reward to risk trades all the time. I have to, because it's not only is it a contrarian trade, first of all, in the direction against where the herd is going, but the reward to risk on these things is great. So all necessary is for you to do is to win one or two of these things every once in a while, and it pays for an awful lot of these trades. And it can, if you get more than your fair share, it can do really, really well for your account. So again, relatively cheap trade with a big payout if we get that to move out. And that would be a break above 1900 in the near term. Okay, looking at the NDX has been by far the strongest here. And notice what's happening also. The NDX is consolidating. It's getting set up to move. On the daily chart, it wants to move. And it's got this weekly chart which says, oh man, give me a break here for a second. Let me catch my breath. And so to satisfy both of these charts, again, the daily chart doesn't care which way it's going to move. It just wants to move. It's going to be fully charged here any day now, probably by tomorrow. And so pulling back just a little bit might set up that higher low, which would be satisfied with a higher high above 16,000. So again, this chart does look really good. This is almost a cup with handle type of pattern here with this. So everything is still trending to the upside. Now, just to be fair, if things were to reverse up here, so there's got to be people out there saying that this is just a bear market rally and this thing's going to fail. And most of the people that are saying that are ones that were recently short, just got run over, so they're pissed off and they're trying to come up with a narrative that fits, that shows that they were right 4 weeks ago. Right? I've been through times like that before, guys, and if you're coming up with a narrative just to prove that you were right a long time ago, or that you're delayed in your correctness, it usually doesn't work out that well. It usually means that you got steamrolled, you had some type of cognitive bias going into things. Maybe you listened to somebody, you read a lot of reports on social media from people that were bearish and it all made sense. Or Michael Burry says that he's bearish and look at the size of the position that he put on. The more that you can get away from that noise, the better off that you're going to do. Get away from the noise, get away from social media, get away from all the people telling you what to do, because if you listen to them, if you take the easy way out, you just become part of the herd yourself, and it's going to be impossible for you to get any kind of favorable return from that. So this is a business of independent thinking. You must be able to independently assess and determine your trades on the market. And then circle back and see whether you're right or wrong and understand the root cause for why it moved or why it didn't move in the direction that you thought it would. So again, markets are not really about predicting the future, not really. It's more about reading the trend and letting the price tell you which way you should be leaning and which way is the highest probability direction for the trend. Let's go out to the intraday chart here. The intraday, you can see we have the upper and lower expected moves. Those are the blue lines. We're nowhere close to the expected moves for today. It's been a total range-bound day. Here was our opening range in red, and that gets extended into the yellow. And so for trades like this, what we're doing is we're using Zero DTE trades. We're going to be doing those in the trading room starting in January. So we're going to be shifting the trading room, my trading room, the Target 100 trading room around to the market open. So we're going to be working the first 45 minutes or so of the market open. And we're going to be putting trades on like this, like an iron fly, where we're looking for the price to stay in one spot for a predetermined length of time. Or we can use things that are a little bit wider, like the expected move iron condor. I'm not really a big fan of the super wide iron condors where you're just picking up, literally nickels in front of the steamroller. Those can be great when markets have enough implied volatility, but right now we have a absence of implied volatility. In fact, if we look at the IV percentile down here, we can see that right now we are at an 8 percentile. So on a scale from 0 to 100, we're at an 8 in terms of the amount of implied volatility. Look at the blue line here over the past year. The very highest levels will represent 100. And for the last year, the 100 level was down here during the little banking crisis that we had back in March. And then the 0 level was probably back here, I want to say, at this level back here in September when it was not really sure that we were going to go on this full plunge to the downside. It looked like we were going to break out to the upside. So that was the 0 level back here, was in mid-September. But right now we're awfully darn close to those low levels from September after this big rally. The market, what I found is that the market is just faster than it used to be about normalizing volatility. So we went from one of the highest levels of implied volatility back at the end of October to one of the lowest levels, and it only took a couple of weeks for us to get there. So markets are very, very rapid about sensing the trend and which way to go. So we're already starting to see a little bit of downside movement here today. We just lost the anchored VWAP, which is the pink line. You can look at that as kind of a dynamic support and resistance during the day, which is what we use. But it's still in the opening range, though. Still in the opening range. But this is actually good. We do need to see the price just coming down just a little bit here, I think. I do not want to see it. If I could put a request into the market, I would say, please don't break out yet. Please don't break out yet, because this is going to be an unsustainable rally. Have you ever balanced a very heavy weight on top of a long, skinny pole? You can do it. You can balance a weight. You've seen people that balance it off their nose, a very heavy weight on top of a pole. And it's possible to do, but if it gets unstable, if it starts to wiggle a little bit too much, the whole thing comes crashing down. And that's the problem with trading something like this, where you see this great big flagpole here. We need a flag at the top of the flagpole. And a flag would look something like this, where we just kind of chunk around for the next couple of weeks or so. Maybe even into around the Christmas time area. and then see if we have our little Santa rally in the last few days of 2023. So that's what we're kind of looking for. We'll see if that occurs or not. Guys, let me know if you have any questions. That's pretty much the topic that I wanted to cover today, was giving you an update on what I see happening with the markets. This is all good. I think this is really good. We were covering, right at the edge of the abyss here. This was threatening to go full bear all over again, and we did drop almost 11% on the S&P. That qualifies as a full-blown correction. So it was kind of stunning to me to see that just coming out of the bear, we transitioned into a bull, and as soon as everybody buys into that, instantly, boom, another 11% correction comes with that. This is a mean and nasty market, right? Because there's an awful lot of uncertainty out there. And so it does make sense that we go through, it's not an easy market. So it's been easy money for the last 3 to 4 weeks or so with a 450-point move. But I think the easy money is probably over for right now. So I think we're going to shift into a little bit more sideways, choppy market here for the next week or two. That would make the most sense. But again, the price can do whatever it wants to do. That's just my feel based on the metrics that I'm seeing in the market. But I'm not going to argue with the price. Whatever the price wants to do, I will salute and say, you are correct. Okay. No questions seen, so I appreciate you guys that have shown up here live, and hopefully you got some value out of this. For you, those of you watching on the replay, by the way, I'm going to be giving a presentation tomorrow on the Friendsgiving, and what I'm going to do is here, as soon as I stop the video here, I'm going to update the information below the video with an opt-in link for my session tomorrow. So it's going to be 2 p.m. Eastern time, and it's going to be about Zero DTE options. So if you're interested in that, please join me tomorrow. Or if you need the link, let me know. Just email me, doc@12minutetrading.com. I'll send it to you. But I hope to see you tomorrow. It's a free session, and I'll be going over Zero DTE trading for about an hour or so. Thanks, everybody. Have a great Monday. We will see you in the next session. Adios. Be good.